The Wall Street clocks its best ever week in over 4 years. The Nifty soars 4% this week. The midcap index has rallied 8%. BSE listed firms have added market capitalization of nearly 22 lakh crore rupees. Hello and welcome to this brand new edition of Editors Roundtable. Over the next half an hour, we will decode the week gone by on the street and put the spotlight on several big deals that were announced. Lots of news flow this week. I'm Surabhi Upadhyay, with me as always, Nimesh as well as Prashant. And today we have Rahul Arora with us in the house as well. At a very interesting juncture in the market, guys. Yeah. I don't remember the last time I read out headlines like that, right? And so much added in market capitalization.
I could sense in your tone, you know, the way you said 4% this week, 8% this week.
Unbelievable, because you can't believe this is happening.
Put into context, I mean, we've just pulled back from an extremely oversold level. So that way, as Prashant said in closing bell, sabke jaan mein jaan aayi hai. I guess, you know, that sums up. Clearly, there was so much of pessimism on the street. People are so scared. And we saw an unprecedented, like, you know, unexpected kind of a strong pullback from an extremely oversold. So it's good that we've seen this kind of a rally this week, but yeah, next week could be quite tricky as well. So we'll talk about that.
But next week, छोड़ो.
Next week, छोड़ो. We should cheer. We should cheer. Rahul is here, and I guess, you know, he'll take us for a drink after the show today. 8% rally. So anyway, he was talking about bonuses.
But clients that you're speaking to, well, in percentage terms, I mean, I don't know, I'm not sure if you've done a straw poll, but how many of them really believe that this is it? I mean, the recovery is for real. How many think this is a bear market rally?
No, so I think, Prashant, first off, thank you for having me on the show. I think the general consensus in the market when this fall began was it would probably end somewhere between 21,000, 22,000. That's broadly what we picked up. It had just briefly dipped below 22,000. Of course, 2nd of April is going to be a very important day with what Trump is planning to do with the reciprocal tariffs. Now, in that backdrop, it's difficult to say whether the bottom has been formed because it could go either ways. But I think this is also towards the back end of the quarter, right, Prashant? So you do have a little bit of NAV propping and management that happens, particularly insurance flows that come in. So for tax reasons, as we know. So a little bit of that for the fiscal year end is also. So this may be a little bit of window dressing. Could it be sold into? Perhaps. Because as I'm sure we'll talk as we go along, it's not, FY26 is not going to be a great year for earnings. I think if you look at banks, IT, consumer, it's not going to be the best year for earnings. So it's not that, you know, our case is not that it's going to go back and test a high, but, you know, as Nimesh was saying, that what you said on your previous show, it's good that it's happened. It's good it's happened towards the end of the fiscal year because, as he was saying, it's probably good for the payouts that we have to give our team. But let's hope it sustains at least between now and the 2nd of April. But,
absolutely. Let me go across to the wall, guys.
Yeah.
And,
yes,
you know,
let's recap.
Cheer up, everybody.
I know. I'm really looking forward to all the stats.
You know,
that Prashant
2 days FIs have net bought, right, in cash market. And it feels like such a win.
Yeah.
That's because it's been so dire.
It's human nature. We love good news, so we latch onto it when we get it.
So let me contextualize the numbers before we move any further. So this is the rebound that I'm talking about. We look at both the quantum of the rebound and the quality of the rebound as well. So let's just start with the 4 indices: Nifty Bank, small cap, mid cap indices. And what I've done is I've looked at how much these indices have bounced from the lows, but also what's the view from the top, from the all-time high, what's the distance. So the Nifty is recovered about 6.3% from the lows, 11% to go back to the prior high. For the Nifty Bank, the number is 6% and 7% respectively. Nifty mid-cap index has bounced 11, but 15 to go for the all-time high. And the small cap index has bounced 13%, but still some 18% to go from the all-time high. Now, the next graphic is interesting, right? Because this came to us from Nuvama's Nikhil Ranka. He sent this data, and you know, sometimes looking at history, it kind of is also reassuring. Sometimes it's scary, sometimes it's reassuring. And this one I thought was reassuring. Every 2 years, very neatly shows you that every 2 years there is a bit of a market fall. I mean, time cycles, right? I mean, every 2 years, small fall. Every 8 years, bigger fall. Not getting into all of that, but just look at this, right? 16, Brexit. 18, Ireland FS. 2020, COVID. Of course, this was very brief but very sharp. 10% Russia, Ukraine in 22, and of course 25. We've got this 16% dip that we've had from the high to the low. Now, how have sectors fared? Pockets and various sectors. Again, same format. How much we bounced and how much is there in terms of distance to go. Metals, CPSE. The CPSE, the PSU space was smashed down, but very smart recovery from the lows. Metals also. Oil and gas, 12%, 23 to go. Real estate, 10.5%. and 25% to go. So real estate is still, in a way, in the dumps with the sharp correction we've seen. PSU bank specifically, pharma is a space, autos on your screen now. And of course, I mean, just last three sectors are interesting. Auto and FMCG, not very much recovery at all. And of course, IT, none whatsoever. Really almost at the lows, despite today's intraday bounce from the morning kind of lows. Nothing very much coming in here, 20% off the highs for the Nifty IT index. Let's get to stocks now. Here, what I've done is, so basically there are 40 stocks on the NSE 500 which have bounced over 20%. The starting date I've used is the close of March of 3rd, which is when the NSE 500 made a low. But I've not used intraday lows on that day, but closing levels. It's all, I mean, the common theme is it's all industrials, manufacturing, capital good kind of names. Not very much by way of consumers. Look at this. Garden Reach, BDL, HAL, Jyoti CNC, Chennai Petro. There is Adani Energy, Kirloskar Engine Oil, NLC, the pipe maker, Welspun Corp, which of course did not have a big correction when the market sold off. JSW Infra, KEC International, kind of gives you a sense, right? That it's top of the list in terms of what has bounced the most is still what did the best when we were actually going higher. The capital market plays have done well, K Fintech, Novama, CAMS. I mean, then a sampling of some other names, DOMS and Amber and Spark. And then you sort of look at stuff which has recovered the least. And here, it's basically the same. They never participated in a big way on the upside. They did actually give up some more when the overall market was falling. It's all mostly consumers. Devyani, Sapphire, Metro Brands, Vedant Fashion, Campus. But, you know, as I said, it's not as if they topped when the market made a top and started selling off. The top was for these stocks was not made in September, October last year. They'd been anyway in a bit of a corrective zone. So maybe that's one reason why they're showing up in terms of least recovered stocks. Mapma India, and of course there's the tech pack, right? Infi, LTI, Mindtree, Wipro, and then there are individual news-related names, but you know, IndusInd Bank shows up because of course the crisis we saw there, and KEI has gotten hit twice in a span of 3-4 weeks with more competition really coming through. But you know, for what it's worth, the bounce has been strong, and it's been strong as well. But 7 days to go for the 2nd of April, which is of course the dateline for tariffs, Trump tariffs. So will we rally into it, or you know, a little bit of cautiousness before that is the question. Rahul, I don't know if you have any thoughts.
It's interesting because I think what you have shown also is probably what the market is expecting in terms of earnings. You know, you picked up consumer and IT. If you look at next year, there's not too much expectation by way of consumer and IT earnings, at least from an index perspective. Again, banks, I think, have probably rallied because they were, you know, they had not moved for a very, very long time. I think if you look at the earnings growth for private and public sector banks for our coverage universe, I think it's at best going to be about 13-14% next year. And that's like pretty much 35-40% of the index. I think the earnings growth in BFSI will probably come more from the non-banking side. So I think what you showed is a very clear reflection of what's happening. Of course, a lot of the defense names that you were talking about, maybe the market had an inkling of those 54,000 crores of orders coming through. So you had, and anyway, defense stocks were down about 30 to 50%, both private and public sector. So there was a little bit of nibbling that happened in. Of course, you know, we've been big advocates of Polycab, and now, you know, first you had Ultratech and then you had Adani. So I don't know how that space is going to particularly pan out. But I think, you know, in many ways, I think the responsibility for the market will fall on Reliance, I have a feeling. And if that is going to hold up, because a lot of the sectors that you spoke about, Prashant, even in aggregate, if they move up, it doesn't move the needle in terms of the absolute index. It'll obviously help you in terms of stock price movements. But if you have auto, cement, you know, pharma, etc., go up, the index is not going to go up 1,000 points if these indices go up 10%. You have to have Reliance, IT, FMCG, or banks participate. So I think it was a very good stab. But I think it's also reflective of the market's mood of what you're expecting in terms of earnings, which at an aggregate level might be, you know, 13-14% if you're lucky next year. So, which is why I said I think we may have bottomed out for the short term, but to make a case for a, you know, sharp rally from here, the market may actually be prepping itself for a negative reaction on April 2nd. Yeah. So you're actually rallying so that you don't fall further from there. Yeah. So even if you were to fall, I don't think that 21.8, which is the low, will probably be broken. If you're, you know, head a little bit more from here before 2nd of April, that might just be a floor, I think, is my sense.
So Rahul is keeping a sobering effect on this party, right?
Yeah.
He's like, guys, don't get carried away.
Don't get carried away. Don't ask
Take it
for
easy, sip slow. It's that kind of a calming impact you're having. So let me actually take that point further, and that's something that I've been thinking about actually, since we spoke to a lot of guests through the week as well. The two big pillars of the market, IT and FMCG, for what it's worth, I mean, these are large stocks, right? Now, how does this play out? Because if FPI inflows are to come back, and many of these passive flows, at least, they still track the index. Now, like you said, and like Prashant pointed out, there are no earnings. I mean, what are you paying for? 3, 4, 5% earnings, both FMCG and IT, at least for the time being. So how will this conundrum play out between incoming FPI flows? They want to buy the Nifty, but this is not, where the bulk of the earnings are coming in. Or do you think flows will also get more specific in other pockets?
No, I think you'll see sector rotation. And I think what you saw on Friday was a classic example of that. I think, you had the PSUs, you had ONGC, NTPC, Coal India, etc. go up. Well, what was the reason for them to go up? When you came into trade this morning, and if you pick the top 5 winners on the Nifty, how many would have said that, those 5 would be the top 5 gainers? So I think there is a bit of sector rotation happening. On days you're seeing cement go up. So I think they're trying to manage the index. It's a phrase that's been spoken a lot about in financial markets, where, if you want to hold it, if one cannot do it, you try and prop up 3. Like I was saying, if IT cannot do it, you try and see if a combination of 3, 4 sectors can do it. So I'm not too worried from an FPI standpoint, because, just to go back to an earlier point, about what clients were saying, we've met a few AIFs and PMSs, Prashant, that are holding 15-20% cash at this point. So, that also limits the downside. And I think the aggregate cash levels in the mutual fund industry are also about 7-8% right now. There's a lot of cash. There's a lot of cash sitting.
22%. PPFSA, we spoke.
PPFA, they're an outlier.
That would be an outlier. I think,
Correct.
they've, to their credit, they've also been one of the best performing funds over a very, very long time. But I think if you're talking about, a 70 lakh crore sort of mutual fund industry, and about 60% of that, about 40 lakh crores being equity, you're talking about 7% cash, you're talking about nearly 3 lakh crores of cash. And if AIFs
Spot on
PMS,
numbers, exactly the math I got from Nilesh of Kotak.
Yeah,
exactly
so
his math, that's the firepower.
These are I mean, when you have that kind of, and now when you are so pressured on quarterly performances, I think, people are going to rush in to buy. There is no reason to sit out beyond a point in time, because like I was saying a little earlier, this is also a peculiar quarter from a fiscal quarter ending NAV management.
Correct.
People, wanting to come in for their tax benefits and so on and so forth. So this, I don't want to use the word artificial propping, but it could just be a little bit of window dressing that could potentially get, sold into if things are not good. Because, let's not look at it quarter to quarter. I think, like I was saying a little earlier, I don't think this is going to be a year. You'd be lucky if you got a 15% earnings growth. अभी इसके चलते आप कितना valuation देना चाहते हैं आप देख लीजिए. It's literally the point that is what I'm trying to make. So, but cash levels will limit the downside. But I wouldn't get too carried away saying, okay, yeah, we're going back to 27,000. I think that is going to be a bit of a challenge.
He's not opening any champagne tonight. Definitely not.
No, well, I mean, it's the weekend of IPL, so you never know.
IPL.
Yeah,
this weekend.
IPL starts this weekend. So, keep an eye on consumer discretionary. Keep an eye on some of the stocks that you would,
By the way,
QSRs, alcohol, all of that.
April 1st is when the tax breaks come into effect. The 1 lakh crore tax breaks. Of course, I mean, by the time it shows up in the spending, etc., it should be at least, I mean, a couple of months, right?
Yeah,
I mean,
absolutely.
But maybe we'll hear from some corporate commentary, etc., around it, especially on the consumption side. And 9th of April, we're all talking about 2nd of April, but 9th of April is the RBI MPC.
Yeah.
So
I guess, but in there at least 25 basis points is given, Prashant, the way they've used the liquidity.
So Somikanti Ghosh, that report said it got a lot of press, right? 75, he said, total this year?
So 50 to 75 is now everybody's penciling.
I think that's consensus. And I think the 10-year to a large extent has factored in 50 to 75. I think you've got 25.
Yeah, we've got another two.
See, you're going to have a residual impact of these tariffs,
right?
On inflation, it's going to be. It's going to be a global phenomenon. It's just a question of, who raises prices and by how much. So I think the 10-year has somewhat factored that in.
Yeah.
By the way, one of the hottest sectors of the week has been insurance, guys, right? I mean, it's been, look at the deal activity, look at the commentary, and look at the money commitment. Nimish, I know you've been looking at a lot of the data here. It's hectic.
Oh, absolutely. So, while we all talked about big action in the capital markets and all in the stock markets, but, outside the market as well, there was so much of M&A which is picked up in the last fortnight itself. I was just looking at the data, and the number itself is quite staggering. 50,000 crores worth of deal already got announced. And majority, as you rightly pointed out, was on the insurance side. So I'll start with the first mega deal, which just got announced last evening. And we saw a big reaction today as well, which was Manappuram Finance. Bain Capital, it was in the speculation for a long time. Finally, they've announced the Bain is buying 18% by a pref, and they're going to make an open offer as well. So the entire deal size is more than 10,000 crores. So that's a big check coming in from Bain Capital. There was also a very large announcement from Prudential PLC. They already have a tie-up in India in the insurance side. They are doing a further tie-up, and they're going to do a JV with HCL Tech, HCL Group. So that was again a big, well, they've not mentioned the amount, but that's again going to be a big commitment from that group. The other big deal in the insurance was the mega deal wherein Bajaj Group announced buying out Allianz stake of 26%. That deal itself was worth 24,000 crores. So again, a big deal in the insurance space. From nowhere, we saw a big deal from Patanjali, not the listed entity, but Patanjali has also announced acquiring Magma General Insurance for 4,500 crores. Again, that was a big deal in the insurance space. I had reported about a possible deal, and that got turned out. Blackstone bought out Colte Patil in a deal, and they made an open offer as well. That is worth 1,800 crores, including the open offer. And there was one more deal where Murugappa Group, Coromandel, they've gone ahead and bought NSCL for 840 crores and making an open offer as well. So those are a few large deals which got announced in the last fortnight. Not to mention, but there's also a deal on Reliance Capital where Hinduja's buying out in NCLT. So that again was a big deal which got announced. So this was largely the M&A part of it. But as you know, what even Rahul was pointing out, we saw a lot of defense stocks doing well. Also because in anticipation of large order wins, right? Yeah. In the last fortnight, 10 days itself, the order wins from mostly for the PSUs is worth almost 1 lakh crore. So, everybody is anticipating that Q4, you'll see in the last leg, you'll see the government order coming in, and that's clearly showing up. So, defense order, there was a DSC approval of 54,000 crores. That was a large deal. Even in the private space, Bharat Forge, they backed a large guns order, which was worth 7,000 crore. BHL backed a large order this week, close to 7,500 crores. KEC International, it's a private company, but they backed an order from Power Grid. So again, it's a PSU order of 1,300 crore. The only outlier was Welspun Corp. It was part of your list as well, Prashant. And that stock has rallied pretty hard, and it's at all-time high because of the large order win in the US. They backed US order worth 2,400 crores. L&T has announced that in the last 10 days, they've backed orders worth 5 to 10,000 crores. So a lot of orders are getting executed, not executed, but getting delivered now. It's been ordered. So I think that also played out in a lot of the stocks as well in the defense names, what Rahul is pointing out. Rahul, the one thing was anticipatory move in the defense stocks in terms of getting orders. But the key question is going to be execution, right? For a lot of PSUs, the execution is going to be the key. Where you think there is going to be an execution challenge going forward within the defensives or maybe the EPC companies or those kind of names?
So I think the biggest risk reward could be in Hindustan Aeronautics, Nimish bhai. I think after the Air Marshal Chief made that statement which went viral, I think if they get their execution order with the kind of order book they have, this is a company that can easily grow at 20-25%. So I think the maximum delta could probably come in on Hindustan Aeronautics, because I think you saw a little bit of flows going right around that time. I think you saw the shipping stock starting to do well.
Exactly.
GRSE, MDL, so on and so forth. So you saw a little bit of movement happening, as while the headline was defense, in the subsectors of defense, you saw a little bit of churn that started to happen post that. So I think that could be one very interesting play. Okay. The other could be BEML. Now this sounds a little perverse to say, but I think if you look at BEML and the amount of work that they've done in Russia, Ukraine, and the Middle East. As and when these geographies stabilize, this is actually an option value for the incremental orders to come in for something like a Bharat Earth Movers. That could be a great story for BEML over the next 5-7 years to find opportunity in adversity. And I think the last is we upgraded Solar this week. I think this is a company we've liked for almost 12 years now. We were probably one of the first people to look at it almost 12 years back. It's a very, very well held institutional company. I think basis our numbers in the report that we just put out this week, I think they should compound their top line EBITDA and PAT by anywhere between 25 to 30%. And it's nearly a 30% return on capital employed company. It's not cheap in terms of valuations because of these. It's a quasi FMCG company. It'll probably deliver $1 billion in cash flows, in a couple of years from now. So that's another one. So
but at least it'll give you growth, unlike the FMCG company.
It'll certainly give you growth. And when you say FMCG, I'm still positive on consumer discretionary. I think it's just consumer staples. Just consumer staples. And just one last quick point, because you were talking about insurance deals, we actually put put out
put
an
out a note on general insurance,
initiating coverage just before the show
Yes.
started, where we've actually put
just
out
saw
a buy
that.
recommendation on the sector.
On the sector.
It's something that we're very positive on.
discuss
Names like Star Health and
let's
ICICI
discuss
Lombard.
this,
Yeah.
Okay, I think we're going to take a very quick break, but lots more, including insurance, including how to play the consumer recovery, all that after the break. Welcome back here with us on Editors Roundtable, and we've got Rahul Arora with us on the show this Friday. Rahul, so you spoke about defense. You're very clearly still convinced about that theme. Let's talk about the next, big high conviction areas, and where does this discretionary consumption fit in? Because like Prashant mentioned, everybody is trying to figure out where that additional 1 lakh rupees will go. Will people spend it on QSR, on more holidays and travel, or, I don't know, other paraphernalia? What's your sense?
Why not stock market and insurance?
Yeah.
I mean, it is discretionary.
Very prudent. You want to have fun as well. Everything cannot go back to the market.
So the more you invest, the more fun you can have, no?
That's true.
No, but I think on discretionary, so like I was saying, I think consumer staples is an avoid, but I think we like United Spirits and United Breweries. I think they're both trading at about 33 times EV EBITDA, but I think the summer season onset has been very strong for the beer players. I think UNSP should also be good. I think the valuations have come down to about 45 times adjusted for RCB's valuation. I think that over the next 6 months, UB could give you a bigger delta than UNSP, but I think if you're playing it slightly more long term, I think UNSP has better levers. We'll probably pay through hotels like Chalet. I think Indian Hotels has had a dream run from 60 rupees to 900. I think Chalet presents a little bit of an opportunity there. I think one other way to play a consumer could also be through P&G and Gillette. I think they have done remarkably well. I think P&G has actually corrected quite a bit, and I think it's providing you an interesting price point. Gillette has finally returned to double-digit, growth, which is a very heartening sign in the stocks. Reacted pretty much in accordance. And if I was to extend consumer discretionary, I think iShares looks like an interesting play. I think if that company is able to grow at 15-16% and grow its EBITDA by about similar numbers, it'll outperform the other traditional two-wheelers. So, I mean, you can find premium anywhere. You can find when consumer discretionary could also be high-end real estate and automobiles as well.
Premium, the premium
so we had also initiated on Hyundai last week. That's another name that we like.
So Rahul, in that consumption discretionary, any view on Varun Beverages or Jubilant Foodworks? The entire Jubilant group, seems to be back in action. There is going to be a block in Jubilant Foods as well. Promoter is going to dilute some stake. Any view on the Jubilant group?
Well, you just answered it, Nimesh. I think when I started looking at Jubilant Foodworks, I think the promoters used to own north of 60%. Yeah. It's down to low 40s. Let's compare that to...
But he's expanding as well, right? He's
Sorry?
buying out...
I don't know if that's the best deployment of capital. Because I think if I compare it to McDonald's, which has been a stock that we really like, it's a single product, single geography company, which has basically diversified only into beverages where the gross margins are significantly higher than the burgers business. The problem that a lot of QSRs have, Nimesh bhai, is that if you look at their master franchise agreements when they came out with their IPOs, and this is in all their RHPs, their royalty benefits are linked to store openings. So if India was to go into a slowdown, God forbid, they will continue to have to open stores. And let me take you back to the period of 2013 when the taper tantrum mini recession happened. Jubilant kept opening 150 stores every year, and their return on capital employed dropped from 45% down to low teens, and their margins from the early 20s into single digits. So that's a risk. And a lot of the other QSRs have acquired companies where Sri Lanka, Turkey, Indonesia. These are not some of the most politically stable regions. So I don't know if that's the best deployment of capital. I think you should stick to your core. There's no need beyond a point to extend into biryanis and Chinese and so on. Do the product and expand it. I think, at the end of the day, if you look at the number of Domino stores in the US, India hasn't even scratched the surface. So our preference would be more towards a Westlife. And as opposed to Varun Beverages, I think the tilt would still be more towards UNSP, UB, and maybe if you want to drop down the market cap, something like even a Radico Khaitan looks interesting.
There we go. We've got some burgers, we've got hotels, we've got Radico. Yes. I think we're fully set for the weekend.
It's an IPL weekend.
And IPL,
it's an
yes,
IPL
absolutely.
Weekend.
Perfect conversation to then, kickstart the weekend buzz. Rahul, thanks very much for joining in.
Pleasure.
Great to have you on the show
Thank you
this
for
week as
having
always. Well, with that, it's curtains, so we have to take your leave as well. Thank you so much for being with us on Editors Roundtable. Stay tuned. News and updates continue on CNBC TV 18.